Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Alain Corbani, Head of Mining and Portfolio Manager at Montbleu Finance, and he's also in charge of the Global Gold and Precious Fund. How are you, Alain?
I'm great. Thank you very much, Ivan.
Yeah,
Good to
thank you.
be here with you.
Yeah, thank you so much. It's great to have you on Wall Street Silver. This is your first time on, so I want to talk to you about, how did you first get started in the gold and silver industry and why?
Whoa, nobody ever asked me this question. So
Really?
yes, it's a great question. I always was attracted when I was a student to the stock market. So investment was really my passion, and opportunity made me join an investment bank, Canadian investment bank, and that was in 35 years ago. And when you are in Europe and you need to sell Canadian products, what do you sell?
Yeah, what
You
are you
can
saying?
only sell mining. So I had really no knowledge of mining 35 years ago, but I knew that this was really my field. The investment was my field. So over the years, I built that expertise in mining, not because of really initial choice, natural choice, but this is life.
Right.
And I don't regret it because we know that in this industry, you don't get bored. You always need to be active because it's a volatile sector, and you need to understand it very well, and you need to understand the cycles. So the whole thing makes it very exciting, but you need to be fit for this kind of work because the sector is cyclical.
Monetary Metals is offering 12% on silver, paid in silver in a historic offering, the first silver bond in over 150 years.
There's about $15 trillion worth of precious metals in the world, all sitting there. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's not easy to ship, and it costs money to store in a protected manner. This platform allows gold to be put to productive use, so instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver, paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Yeah, it's very volatile. And I wanted to talk to you about, since your start in the mining industry and you've seen everything happen over the years with the global economy, silver and gold, in what opinion, what are the key considerations for investors, looking to allocate resources to gold and silver given the current global conditions?
Well, there are maybe we can summarize it in three bullet points. The first one is to remember that it's cyclical, so you need to identify where we are in the cycle, and this is a very, very significant part of the job, because if you miss the timing of the cycle, and it's a multi-year cycle anyway, but
Right.
if you miss it, you are bound to be disappointed in your investment returns. So that's number one. Understand the cycles and where we are in the cycles. And of course, you need to focus on the highest negative or positive correlations with those precious metals.
Right.
And in essence, everybody mentioned the US currency and everybody has mentioned real rate. So if those two, which have a negative correlation, are positioned favorably, you will have a good return on gold and silver. And I know that we're going to talk about silver maybe more than gold, but silver is more volatile, and silver has an industrial component that gold doesn't have. And this is why it's even more important to understand. My first bullet point is that cycle. Where do we
Right.
sit in that cycle?
Right. And how like I want you're in the mining sector, you've been in there for many, many years. There's a lot of people talking online about there's no new silver mines popping up with like a pure silver play. It's just a byproduct. Why is that? Why over the years, historically, you can't find these pure silver mines? Are they still out there, or we're just not finding them?
Ivan, what you are saying, I heard it 35 years ago.
Oh, really? No way.
So in essence, nothing has changed.
Uh,
Really, literally, nothing has changed. Uh, you do have a few pure silver companies that are publicly listed, but this is not the norm. Most of them have a byproduct. And keep in mind that usually silver mines are less profitable than gold mines.
right.
So this is another element that we need to incorporate when we
Yeah.
select silver companies.
Yeah, because the gold prices are higher, of course, and I'm sure they have more money to work with. Do gold mining companies have more money to work with than silver mining companies?
Um, well, uh, your question implies that we can compare a silver mine with a gold mine and or a silver company with a gold company. But the
Right.
reality is that most silver companies produce more gold than silver,
Oh, that's right. That's right.
or
That's
produce
incredible.
produce more base metals than silver. And most of the time, when it's a base metal silver composition, you will all usually it's a 50-50 breakdown.
Right.
So and of course, you're not going to value an industrial mining company with a precious metal mining company. So this is another factor that you incorporate. But now these are really to put this in perspective. But since passive management has taken over active management, there is another component that you have to incorporate, and that component is the fact that the question you have to ask yourself is, does this company belong to an index?
Right.
And if it does belong to an index, what is the weight in this index?
Right.
And if there is an inflow or outflow, well, obviously, the price of those mining companies in those indices will evolve not in total sync, but with a high correlation.
Yeah, absolutely. So let's say me right now, I've never heard of silver and gold mining companies, but now I'm an investor, a new investor, and I want to go into the industry. What are the 5 or 10 things you look at? Something simple that you look at when you look at a company before you invest in it.
Uh, First, I have to decide what allocation I'm going to dedicate for the precious metals, whether it's gold, silver, or palladium and platinum. These are the four major precious metals.
Right.
So today, as we stand, 80% of the fund is invested in gold mines, and 15% is invested in silver mines, and 5% in a platinum palladium company. And the platinum palladium is more a turnaround approach. It's an turnaround investment story. Silver, as I said, where are we in that cycle? We have said for a couple of years now, summer of 2022, that the economy was slowing down.
Right.
So if the economy slows down, and if you agree with that thesis, and you would be very it would be uh, I would be surprised if you
Right.
disagree with that statement that the economy is weakening. If the economy is weakening, you don't want to be in industrial metals.
Right.
You don't. And to say that the dollar is going to weaken and therefore commodities are going to rise is a very, very dangerous shortcut, very dangerous. So if the economy is weakening, it means that demand is weakening. It means that industrial methods will weaken. Silver is in between two seats, in between the precious metal story
Right.
and the industrial demand story. So when the psychology, the investor psychology is so lost as it is today, you will have a lot of volatility in silver, because on one day you will be freaking out because you had a bad macro stat that shows that the economy is weakening, and the next day you will have another statistic data that shows that after all the economy is still holding on. So, and this is why you're going to have a lot of volatility. But the reality is that the economy is slowing down. That's number one. The second point is that if the economy is slowing down, interest rates will go lower.
Right.
Lower. They
Yeah.
are not going to go higher. If interest rates go lower and inflation is going lower, and it is going lower, then we have this perfect environment for a higher gold price.
Mm-hmm.
Silver has a very high correlation to gold, so silver will benefit from the interest the investment community has for gold, and it will be more volatile.
Mm-hmm.
So economy, interest rates, and by the way, if we don't want to confuse your audience, we will say one thing. Each time the Fed paused, not lowered its Fed fund rates, it paused. Each
Right.
time the Fed paused, gold went up.
Yeah, that's true.
So So if you really want to summarize the whole thing, when the Fed starts pausing, gold goes up, and this is exactly what happened. And silver will follow, but silver will be more volatile because you have this ingredient, this industrial component that will affect the mood of the investment community for that precious metal. So I would be selecting silver mines that have leverage, because we want leverage. If we're investing in silver companies, it's because we are looking for leverage or turnaround, but we are not looking to be overexposed to silver.
Alan, you nailed it right there, and I absolutely agree with you. And with you see central banks, they're buying record amounts of gold. China's buying gold at record paces. What do they see that we don't? Like, do they see that there's going to be an incredible amount of instability coming in the future, within the next 5, 10, 15, 20 years? So they're just constantly stockpiling gold. Yeah, what do they see that we don't?
Well, everything you said is correct. Everything, but let's moderate this statement. Gold, the price of gold went up not only because central banks have been buying.
Right.
Uh,
Right.
Central banks have been buying for the last 3 years. And if you look at the tonnage that were purchased by the central banks, they are almost identical over the last 3 years.
Oh, okay.
So to say that precious metals gold went up because of central banks buying, the answer is yes, but
Right.
that's not the only reason. So why are they buying? They are buying because they want to diversify, as simple as that. And
Mm-hmm.
because they don't have enough gold in terms of percentage of their total reserves. So that's a normal phenomenon. But there are other actors who have been buying gold. If you look, the Chinese retail market has been
Yeah.
big buyer. The US retail market has been a big buyer. What do they see? I think that I I haven't asked them the question, but I do have a few contacts, shops in the US who are trading silver and selling coins and so forth to their retail clients. And
Right.
they are all telling me one thing. They are all saying that their clientele is mainly made of gold or silver bugs.
Right.
So these are the people who, no matter what happens, will always be bull on the metal, no matter what happens. Okay, the gold can be down 50%. There will be a good reason to explain why
Oh
it's
yeah.
time to buy it. But to say that there is another reason like inflation, like recession coming in, or loss of purchase power, parity,
Right.
are things that are too not palpable enough to be able to make strong statements about them.
Absolutely.
But the reality is that the economy is weakening. I will repeat, I will never repeat it enough. And
Right.
interest rates are going down. And this is why everybody should have an exposure to that sector, because this is the perfect storm for a higher gold price and therefore a higher silver price.
Yeah, I absolutely agree with you. What are some challenges that mining companies face, in terms of like environmental sustainability, a
Oof.
social responsibility? Yeah, just go into that.
Uh, uh, everybody has been talking about ESG, and that has become a huge trend, and a lot of institutional actors have written off the sector, the mining sector, because it wasn't clean enough, because
Right.
it was polluting too much. I will just remind everybody here that if there were predecessors to the SNG in the ESG component, it's the mining companies. The
Okay.
mining companies have always been at the forefront of all those requirements that all governments want now from economic actors. So when it comes to helping a community, when it comes to building a hospital, when it comes to building a dam, when it comes to bringing water, safe water to people who didn't have a chance to have it, the mining companies were number one at the
Wow.
forefront of those trends, and that has been the case for 30 years. So they don't have any lesson to receive from anybody in that field. The biggest problem is the E component of the ESG, and that's the pollution,
Right.
right? So yes, mining companies are polluting, but they are making efforts. They are making efforts.
Right.
And when you see some terrible accidents, mining accidents that happen, like very recently with a Canadian company, this reminds us that it's not an easy business.
Yeah, of
This
course.
reminds us that we are always judged. The mining industry is judged on that mistake it's going to make, and it spills over the whole group. And this is I mean, you have to deal with it as an investor, but those accidents are extremely rare. But when they happen, they just blow in proportion, and they make the whole mining industry look ugly. So I think more work, more discipline, and more you only the time
Yeah.
will have this industry, only time, because they are doing the right things with the SNG, and for the E they are adding electric vehicles. They are trying to reuse the water that is being used in the transformation process, in the mining
Wow.
process. So work is they are heading in the right direction. We're not there yet, and frankly, there are no miracles.
Yeah, I agree with you. Well, this is incredible information you shared with us today, Alain. Like, it's such a huge pleasure having you come on. It's your first time, and hopefully, it's not your last time. As the market and the gold and silver precious metals industry continues to develop, we'd love to have you back on.
It will be a pleasure.
Awesome. Thank you so much, Alain. And again, thank you everyone for watching. Take care.
My pleasure. Bye bye.